Maybe disaster is too strong a term. But having said that, economies historically have not moved towards prosperity on the back of protectionism. There is ample evidence stretching back decades after decade that solidifies that particular conclusion. So we've spoken for some time, we being the analysts at various banks and various commentators, that ultimately the price of protectionism and higher tariffs is paid by consumers. It's paid by corporates, and it eats into margins and it eats into disposable incomes. So I'm not sure I would argue that the US economy is flirting with disaster, but in agreement with the commentator earlier, tariffs are not good for the domestic economy, and that's something that the Trump administration is either deliberately overlooking or it's playing its hand here in terms of arguing that this is a policy stance that it can't reverse. But it's not good for the domestic economy. It's being paid for really by corporates and by households. It can't be good for consumption going forward.
And certainly when you look at the impact on global confidence as well and decisions around investment, the uncertainty that it creates, that also translates negatively into those factors as well. The other reality is Trump's threats when it comes to tariffs are no longer just a negotiating tactic. We're going to see those tariffs coming into effect. What do you think that means for the Chinese economy, Chinese equities and the yuan in the near term? Is this something you're looking at?
Yeah, we're looking at this very closely because China is really bearing the brunt now in terms of a market reaction. I think that we need to look at this in a more sort of holistic fashion, to the extent that I do expect the next 2 days to be very crucial in terms of the US-China negotiation. It's got to the stage now where both China and the US have set their stall out, and to reverse their stance from their current position would seem like backtracking. I think the Chinese are looking very closely at the US in terms of a potential market correction, knowing very well how sensitive Trump is to weakness in the financial markets. And Trump is probably betting on a continued sort of slowdown and continued concerns on the Chinese economy as the prompt, as it were, to push the Chinese towards some sort of negotiation. So I think the next couple of days are going to be crucial as to where we springboard from here. I do think there is a strong probability that we don't get the tariffs over the next couple of days. I think there will be enough negotiation and enough agreement over the next couple of days such that we'll ultimately get delayed again. And that this has really been a tactic by Trump over the last couple of days, really since the tweet on the weekend. This has really been a tactic to play hardball with the Chinese once they actually sit down in Washington. So I do expect this to mellow down somewhat. At least I hope it does, because if it doesn't, then certainly Asian markets are really bearing the brunt of this. When we look at how Asian currencies are moving, when we look at Chinese equities, what this risks, again, is capital outflows from Asia back towards safer havens, Japan being one, but also, of course, back towards more safe haven currencies, more safe haven in terms of treasuries and bonds. So this risks capital outflows from the region.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.